Greetings traders, Jason here with SwingHigh.com. It is Wednesday, November 11th, 2009, and this is your halftime report. Some exciting, important action going on today. As you can see, this morning we gapped up above 110. Actually, late in the after-hours session last night, we broke above the 110 mark, and we opened significantly above it, around the 110.30 area, rode up to 110.80, and now we're selling off back under resistance. As you can see on the way back down, this definitely acted as support. We have support, broken pretty hard, came back up, acted as resistance, broke out, came back down, acted as a little bit of support, and broke back down again. So we're testing away this 110 area, which could be bullish or bearish in this situation. If we stay below it convincingly and close below it, that will just be an upper shadow, and on the daily chart, that upper shadow will just be considered a test of that mark. That is, if we close down here. Oh wait, I don't have my 110 line drawn in, I don't think. No, I do. If we Oh, okay. So we did test away a lot of that resistance, and right now the double top formation is pretty much invalid. So what we do have is a higher swing high, which means that we're just continuing in this uptrend. No worries. We are losing momentum though. As you can see, each swing high is a little shallower than the next, or than the previous one. They were much higher, much higher, much higher, much higher, not as high. And if we stop up here, it could be a long, drawn out, rolling over process here that we see. So take that note that we did break the 110 area, but also keep in mind if we close below it, that we will still be below that major resistance. And this could just be a jab if we do come back down and stay under the 110 area, although it would not be as convincing of a head and shoulders. Anyway, let's take a quick run around the markets to compare the indexes. The SPY up 0.25%, the NASDAQ up 0.3%, the diamonds or the Dow ETF up 0.21%, the Russells, the IWM up 0.36%, and the financials up 1.2%. So the financials are the real leader today, showing some major relative strength to the rest of the markets. But keep in mind, if you look at this pattern, do you remember the SPY pattern that I want to compare it to? As you can see, SPY made higher swing lows and higher swing highs. Do you see that? Now we go back to XLF. XLF did not make higher swing highs and higher swing lows. We have a higher swing high, higher swing low, higher swing high, lower swing low, and now we're not making a higher swing high right now. If we were to stop here, it would be a lower swing high. So that's relative weakness on the broader time frame of XLF, although it is showing strength on the intraday time frame. So take those notes and compare different time frames. That's always important when you're trading. Let's take a quick look at the market internals. We have the tick. Started out bullish, dipped into bearish territory, and is hovering around neutral right now. The Trin is bullish, even though we did sell off after spiking up this morning. So as you can see, it's not as bullish as it was this morning, but it is still bullish, being under 1. The VIX, however, the tiebreaker, is bearish. It gapped down or spiked down this morning, and now it's popping back up pretty hard, pretty convincingly, up almost 3% right now. So that means the markets could finish down pretty big. Keep in mind, we still have not filled this gap either, so we came close, missed by a few cents here, but not filled yet. So that's what I'm seeing. Take your analysis given here and compare it to individual trades you might be taking throughout the day. I'll talk to you this evening for your post-market analysis, and thanks for being a part of SwingHigh.com.